and Afro-Tez, and I think Pinky as well. And also in the audience, we have Esther Mukumbo. So those are some of the guys that I met through Twitter, part of the Fin Twitter community. And since then, I've been learning a lot from them. And our audience have grown, hence here we are today. So I'll just give them a chance, starting with Tez, then maybe Neo or Esther, just a minute introduction, then we can get started. Tez?
Yes? Or am I introducing myself?
Yeah, just a minute talk, then yeah, we'll start.
Hi, everyone. I'm Tez, more commonly known as Afro Tez from Twitter. I'll be a guest speaker here, and I'll throw in a few jokes where I can. Um, I'm hoping that most of us do get something from this. I know that the speakers that will be here probably know more than I do. So don't be alarmed if I'm a bit quiet today. But yeah, that's me.
All right, thanks, Tez. Neo? Okay, Neo is not responding. Esther?
Have you made them speakers?
Yes, I did.
How many speakers are currently on the panel?
No, it's only myself for now. Let me add them.
Hello, can everyone hear me?
Yes, we can. Yes, you can go ahead.
Yes, we can.
Hi, everyone. As mentioned, my name is S. I've been investing for a while now, since 2018. I was investing prior to 2018, but it was really just, small amounts and just putting in here and there. It wasn't really serious. I really just got serious in 2018, and I'm just looking forward to sharing and hearing from the other speakers and hoping we can impart some knowledge and learn from everyone as well.
All right, thank you, S. And our last speaker, Neo. Neo, are you there? No. Okay, guys.
Seems like Newa is having some difficulties unmuting herself. Can you just check that she's not on mute from your side?
I'm trying to check that. No, he's not. Yeah, there is. He's green. He should be able to talk. Now can you hear us?
Neo, if you can, probably try unmuting yourself as well. Just make sure that you're also not on mute.
Okay, it's fine. For the sake of time, let's continue. Then he can join us along the way. All right. I believe you can all see my screen.
Yes, we can.
All right, cool. Let's get started. So yes, as I mentioned, this is basically a beginner's guide to the stock market. So one can ask, what is the stock market? This is also known as the shares or the equity market. So this is basically a platform where investors can trade shares and CFDs and other instruments. All right. And some example of well-known stocks exchanges, these include the JSE, which is our local trading platform, the New York Stocks Exchange, the London, and the Nasdaq. So the stock exchange basically it allows for the public or anyone to trade or sell or buy shares in a secure and well-regulated platform. So it allows also companies to issue and sell shares to the general public through initial public offerings, which are IPOs. Then through that, then the company can then raise funds through that to either fund their new projects or to grow their portfolios. All right. Now the main role players in the trading space, we have stockbrokers. So these are the guys that actually buy and sell shares on your behalf. So you cannot go directly to the JSE and buy or sell shares yourself. You need some sort of middleman who will act between the exchange and yourself as an investor. And we'll get to that in the next few slides. You also have asset managers. So you can see at the bottom the likes of your Old Mutual, 91, Alexander Forbes. So these are the guys who invest large amounts of money in the form of portfolios, be it hedge funds, mutual funds, or unit trusts. Right. Then you have your investment bankers. These are the guys that represent mainly companies that either wants to list on the stock market. They advise them through the listing processes in terms of compliance, and also advise on what they call M&As, mergers and acquisitions. Say one company wants to buy another, then those are the guys who evaluate the two companies and see if it's viable, throughout the whole transactions. Then you have us, the investors, that is the general public, invest in or own shares on the stock exchange. All right, and then now coming to trading versus investing. These are more or less the same depending on your personal preference, but the difference are that with trading, you're looking at a shorter time frame. You can place trades and close them within minutes or hours or even days. Whereas with investing, it's more of a long-term approach. So here you look at anything between 3 to 5 years, or even say 10 or up to infinity. That basically depends up to you how long you want to invest for. All right, and with trading, you have the option of buying and selling your shares. All right, so with buying, you buy a share in the hope that it will grow. So we're talking of capital appreciation, whereas you can sell it, or in the trading terminology, they call it shorting. So here you short a stock, you sell it in the hope that it will go down. All right. So a share, say, trades at 10 Rand, you short it. If it goes down to 8 Rands, the difference between that, then that will be your profit. Whereas when investing, you mainly buy a share at a lower cost, hoping that it will grow. So if you buy a share 2 Rands, then it goes up to 4 Rands, then that will be 100% growth. Then the difference is that will be your profit. All right. And with trading, because the markets are volatile, you mainly look at a high risk, and the returns can be high as well. Whereas with investing, you look at variable risk and return depending on the different asset classes. We'll get to that in the next few slides. All right. Mainly traders use a combination of technical and fundamental analysis. So technical, basically they look at your graphs, they look at trend lines, and I think Tez is an expert in that. So if you need some technical analysis, he's your guy. All right. With investing, mainly they're driven by fundamentals. That is, you look at a company's valuation, you look at your balance sheet, you look at some ratios, P ratios, profit margins, and the like. So basically, you're looking at the company from a financial point of view to say, is it in a better financial position, and look in the future, they able to grow their profit margins, right, without not paying much attention to its technicalities. All right. And then with trading, you don't actually own the underlying assets. So you look at what they call CFDs, contract for differences. All right. It's basically the difference in the price changes as they go up and down between the different trading platforms. You don't actually own the actual shares, all right? Whereas with investing, you are a shareholder. So you buy 1% of Naspers or any company. You're actually entitled to attend meetings and have a say in how the companies run. You can vote in their AGMs and actually have a say in how that particular company is run, as opposed to trading whereby you're just selling and buying either commodities or companies. All right, now coming to the asset classes, these are the main 4 or 5 asset classes that one can invest in. The most popular one, obviously, it's shares. So with shares, you own a portion or part of a company. All right, so you become a shareholder. As I mentioned, you have a say in how the business is run. And as I said, you can actually vote in their meetings to say, I'm against this decision or I'm for that decision. And with shares, being a shareholder, you're entitled to dividends. That is profits that are made by that particular company. Another popular form of asset class is what you call exchange traded funds. So this basically it's a mixture of shares, not just one. All right. Say for instance the top 40. The top 40 will represent the top 40 companies in South Africa. All right. So instead of investing in one share, you basically spread your risk across a variety of shares. And these ETFs, they're very considered low risk because you basically spreading your risk in a variety of sectors, not just one. So if you invest, say, in one sector, say the PGM industry, if it crashes and you have some of your position in, say, the financials, then that difference, you have that cushion in terms of not your whole portfolio does not suffer. Some may go down, some may go up. Then that balancing, that's one of the advantages, of the ETFs. And then of course property can be commercial, industrial, or even residential. All right. So one can buy a house in the form of an investment, hoping to sell it at a later stage for capital growth, right? And you can also get involved in property through real estates. We call them REITs, real estate investment trusts. So the likes of your Bowen Properties, Vukile, and the likes. And there are also some property ETFs offered on the JSE as well, through your Satrix and the various platforms that I use. And the other popular asset class is commodities. So commodities, you can have a variety. You can either have metals or agricultural products. So this is what we call more or less hard versus soft commodities. So your precious metals will be your gold, platinum, silver, which is your normal metals that we used to. And also your soft commodities, your soybeans, rice, they can also be traded on various platforms. And you have energy as well, oil and natural gas. And next you have bonds. So bonds, they are securities, they are issued by either governments or some companies for a certain period. And these are mainly fixed for a couple of years. The advantages of bonds are that they are low risk, and also your capital is more or less guaranteed. All right. One example is the South African Retail Savings Bond. So they actually issue bonds whereby you as an investor, you can borrow money to the government and they return it in a few years in the form of, and then you get a fixed percentage of that back. Right. And their interest rate, they can vary anything between 7 to 10%. So with investing comes risk. So the chart just shows the various asset classes showing their risk versus reward ratios. So if you look on the bottom left, those asset classes, there are many associated with low risk and low returns. That is your cash and money market. So various banks, they offer anything between, I think, 2 to 8%. I think up to the max, it's around 12%. I think African Bank, they offer, I think, fixed deposit for around 12%. And I think Time Bank as well offers some good interest rates. All right. But I think if you look at the graph, the lower the risk, the lower the returns. Right. And as you go up, then you get into more higher return asset classes. You look at ETFs or your mid-cap shares. The risk there is more or less moderate, also the returns as well. And then higher up the end of the curve, you have your small caps, equities, and also commodities. So as you can see, the higher the risk, the greater the return. All right. Now, as I mentioned, that one cannot trade directly on the JSE. So one needs to trade through a stockbroker. So these are just some of the names that I've compiled. It's not all the lists, and also indicating which various platforms are good for investing or trading. So the first one, popular one, it's EasyEquities that I think most of us use. Those that are into investing. I think it's good for investing, that is buying and holding for long term. For trading, not so good because it does not, it has limitation in terms of some functionalities. One can put, for instance, stop losses and things like that. You normally trade on the actual market value of the share. It doesn't have that much flexibility. And then you have the Standard Bank online share trading platform. I would say it's good for investing as well. But if you have large amounts of capital, you can use it for trading as well. And I think the same applies to the Upstart stockbrokers. And then the low-cost version of the online share trading platform by Standard Bank, it's the Auto Share investing platform. It's also good for investing, that you buy and hold your shares instead of trading. It's also associated with low fees compared to the actual online trading platform. And then you have the FNB Share Saver as well. These platforms they're good for investing than trading. But if one wants to go into actual trading, as I mentioned, shorter time frames, in and out type of transactions, one should look at the likes of eToro, Plus 500, Interactive Brokers. So those actually give you a range of options to be able to trade international companies, not just local. Right. So once you've decided to invest, so the question will be, how does one actually make money? So there are two ways in which one can make money. One is through capital growth. So here you look at increases in the share price. So say you buy 10 shares of company B or A at 10 Rand, including your fees. So that 10 Rand will be your initial capital. Say that share price within a few days or weeks grows to 12 Rands. So now your value then becomes 10 Rands times 12, which is 120. That difference between the value and your initial capital, that will be a profit. And one of the questions that come about is to say, can I sell my profit without reducing my number of shares? The answer is no, you cannot. The only way to get through that profit is if you sell it, right? So you have 10 shares at 12 Rand each. So if you want to sell, say you want to take out your profit, you actually have to sell, say, maybe 2 shares. That will give you, say, 24 Rands. So what you'll be left with, you've sold 2 shares at 24 Rands. So you'll be left with 96. Also, the number of shares that you get post that transaction, they will be reduced. They will not remain the same. So you cannot take out your profit without selling your shares. All right. The second part is through dividends. So dividends basically profits that are paid out to shareholders. All right. So say end of the year, companies does their financial and they're sitting in a better financial position, so they can issue out a dividend as a reward to their shareholders. All right. So they can declare profit, say, of 1 Rand per share. Say you have 10 shares, that will be 10 times 1. You have 10 shares. Then there is tax applied of 20%. So your final amount will be 8 Rands. All right. But not all companies issue out dividends. This is dependent on, as I said, the financial position of the company. And the higher the number of shares that you have, the higher the dividend amount, right? So one cannot buy 1 share and then their friend buys, say, 100 shares. Then then expect the same amount. So the dividend amount it's issued per share. So obviously the one with the high number of shares will get more dividend amount. In this case, it will be 100 rand, and then you apply tax 20%, they'll probably be on 80 rands, as opposed to one person who bought one share, then they get a rand, or 80 cents in this case. All right, so there's just some pictures showing how one can actually make money. One can really make some good profits. As you can see, the stock rate's around 126% up, with a profit of 500 rands. And then also just show a transaction of the recent RMB dividend amount. Now, so look at the numbers. If one watches TV channels, financial channels, there will be a bunch of numbers that are moving up and down, or even on some websites. So those numbers represent one, the current price, the price changes, and also the daily movements of that particular share. So here I give an example of Discovery. Its current share price, it's 146 rand, 0.25 cents. That's its current price. So the current price will represent the final transaction that took place at that particular amount. All right. Then the price change will be that movement, either in cents or rands for that particular date. All right. And the daily movement will be that 1.3%. So obviously, as you can see, the higher the percentage, the higher that price movement will be. All right. But also you can see, you can have in red, you can also have some shares that are going down. All right. And then locally, the JSE opens around 9 a.m. Until 5 p.m. The trading hours are from Monday to Friday, so we don't trade over the weekends. So you have, in every trade, you normally have three current prices. You have a selling price. So the selling price, it's what the sellers would want to sell that particular share for. Then you have the trading or the market price, which is the last transaction of that particular share, and then the buying price, or the bid price. All right. So with investing, there's a principle called buy and sell high principle. So you want to buy shares at as low as possible and sell them as high as possible. So it's the buy low, sell high principle. So hence, you always see the selling price, or the ask price, always is greater than the buying price, because the sellers want to sell at a higher price, whereas the bidders or the buyers want to buy at a lower price. So if you go back to the example of Discovery, it's trading at 146 rand. As a bidder, if I want to go bid an order on that particular share, I'll probably put my limit order, say, at anything between 140 or 142, because I'm waiting for it to go down, then I can get in at a lower price. But whereas someone who bought it at, say, 140, they'll probably put a sell limit at, say, 150 or 152 to try and get as much capital as possible from that. All right. Now, do you buy shares low and then they go high? No, they don't. They don't always go high. You know, they either drop, they plunge, they sink, or they dive. So these are some of the terminologies used in referring to stock prices that do go down. So here I have 3 examples. I have one of Aveng, the most popular one. You can see it's down 25%. But because its share price is so low, it's traded everything between 3 to 4%. So if it's at 4 cents, it goes down to 3 cents. That's a 25% drop. It might seem percentage-wise it's a lot, but if you look at it from a cent point of view, it's actually less. And then there I've just showed the picture of Bitcoin, the recent I would say, crash of the Bitcoin. And also on your right is the top 40 index, the local top 40 shares. So the other important thing, and look at graphs. I think we'll get more into details in the next seminars on how to identify on technical analysis. So if you look at graphs on a shorter time frame, you will see that, for instance, the top 40, you see that the trend is towards going down because that's a weekly graph. I think I took it 2 weeks back. But it's important that you shouldn't look at only the daily movements, but look at shares on longer time frame. All right. So not all shares go up, but most actually do if you hold them for longer. So here, as you can see, this is a chart showing the all share index. You can see from 2015 to date, the trend has been to the upside. 2015 they managed 5.1%, and then 2016 2.6, and then 21%, and then 2018, due to that global economic crisis, they were in the negative 8.5, and then 12%, and then 7%. But if you look at, say, the yearly graph, say for 2018, one would think the shares are actually going down. But if you look at a longer time frame, you can see that, as I mentioned, that the movement has been to the upside. And overall, the JSE index has managed to return at least 8%, which is not bad. And it's considering that, as I mentioned before, normal cash or money markets account, they give you anything between 2 to 5%. So 8% is actually good. Then also it's better than inflation. So say 100 rands invested in this index, say in 2015, would actually give you 148 rands today. So that includes the capital growth plus the dividends. All right. Now, how does one actually manage their risk? Because we mentioned that investing comes with risk. So one is to diversify their portfolio and not put what they call put your eggs in one basket. You need to invest in a variety of asset classes across different sectors, even locations and currencies. And to hedge yourself against, say, local markets, it's also important to get some form of offshore exposure through the international markets, the US, China, and Europe. You can do that, as I mentioned, through either ETFs. You can have local ETFs, or through a platform that gives you access to actually those international companies. And the most popular ETFs that are local, you look at the MSCI World, and there's the Core Shares Total World ETF that was launched recently. You have the S&P 500, you have the Nasdaq, and the FTSE 100 in Europe. So that gives you some form of international exposure to global markets. All right. And also one is to do as much research as they can. I can't emphasize this enough. You need to invest in yourself, read as much as possible so you can make better and more informed decisions. And also invest for the long term, right? Be patient. Some of the most successful investors, they are tested through hard times in bear markets. So when everything crashes, you need to be able to manage your emotions and say and understand that this is a long-term plan, and not avoid selling and buying because markets are fluctuation. All right. And most importantly, it's a psychological game. You one is to be able, as I said, manage the emotions and be able to hold for the long term. All right. Yeah, as I mentioned, the issue around research. These are some of the websites or platform that one can read up on. Sends announcement, companies issues up-to-date announcement daily, either on expansion projects, trading statements, issuing of dividends. So if one invested in a company, one needs to follow up on that and understand where that company is going. And there's the various websites, MoneyWeb, Share Data, Online, Investing.com, Google Finance, and the likes. And there's also amazing videos on YouTube about how to get started in investing, how to buy shares, and which companies to look for. And of course, Twitter. That's where I learned most of the stuff that I know now through the amazing people that I've met, and some that I've introduced earlier on. So yeah, personal finance, it's quite a broad field. So as you can see, I just highlighted the part on investing. There's still other areas of personal finance that we haven't touched on. Issues around debt. How can one pay off their debt and actually use it as a leverage to actually increase their assets? All right. There's issues around savings or emergency funds. There's ETFs, tax-free savings accounts, budgeting, and tax and insurance. So today we just covered one aspect of investing, and I think hopefully we'll have more of these sessions and cover the other topics. All right. In conclusion, these are just some of the quotes from Warren Buffett, one of the most successful investors. And the one goes, the stock market is designed to transfer money from the active to the patient. So as I mentioned, it's a long-term game. Investing is a long-term game. One needs to invest for the future. It's not about putting in 1,000 rands today and expecting it to be 1 million by next week. You need to buy quality asset that will put you through time for the long term. And again, as I mentioned, research. Never invest in a business you cannot understand. Understand the company's business models, their future growth. Do they have prospects of growing? What are their plans for the future? All right. And only buy something that will be perfectly happy to hold if the market was to shut down for 10 years. Again, it talks about buying for the long term and not letting market fluctuations get the better of you. Yeah, I think we've come to the end of our presentation. Thanks for listening, guys. Any questions, comments?
Do you want us to ask you questions?
You have questions, Tez?
No, I'm just asking. Should we ask you, or are you going to ask us?
No, you can ask. Then, I'll see if I'm able to answer. If not, then I'll throw it to some of my guests.
Oh, okay. I don't have any questions at this moment. I was just seeking clarity.
All right. Comments? Anything you want to add? Something we feel we left out?
I'll probably just speak from my my personal experience. And I think it's a point that you didn't actually add here, so I think I can contribute in that aspect. If you don't mind, can you just go to the slides with the trading platforms?
Yes.
Thank you. I think you did touch on it a bit, but I think it's something that should be emphasized. that when users are trying to choose a trading platform or an investing platform, rather, that they should consider costs. If you're a long-term investor, costs will play a very big role in your investment portfolio overall. If you look at some of the wealthier investors with bigger cash, when they enter negotiations, when they want to buy a stock or they want to invest in something, investment cost is a make or break deal. And if you are starting investing, you should think along those lines as well. What will it cost you to get invested, especially considering compound interest? So in the short term, it might not seem like a lot, $4.6 here, $4.6 there, but the compound effect on those expenses compared to something cheaper will actually play a big role in your overall investment portfolio. If people do want to invest in terms of fund managers, I do know that one of the fund managers or companies that really do try to bring costs down is Signia. They've got some portfolios where they try and really minimize costs for investors who use that as a make or break deal. And that's one that people can consider. Obviously, you did touch on Easy Equities as well, which is currently the most affordable platform to invest in stocks locally. And then there are various others for external markets where you can find cheaper options. But like you alluded to towards the end, research will play a very big role for investors. And yeah, ask around, do your research, and in the end, you will become a better investor or better trader. Yeah, that's just my addition.
All right. Thanks, Tess. I see Takuzwa has their hand up. Do you have a question, Takuzwa?
I do see there's a question here.
Yeah.
Gatlek was asking if you will touch on the differences or similarities between REITs, property ETFs, and property ownership through arrangements like Easy Properties.
I haven't touched on it, but I can just simplify it. As I said, with REITs, real estate trust, I think I gave examples of the likes of Vukile, Bowen, and in my understanding, those are property developers, right? They can either rent out units, residential units, or some are also involved in office and industrial uses. And property ETFs, as I mentioned, ETFs are a basket of shares. So if you invest in a property ETF, that will be an ETF made up of property companies. All right. Then property ownership, the Easy Property. I'm not really invested in it, but I'm really got into the details of it. But I think it's more of a, how to call it, to say it, I would say it's a Stockfield type of transactions whereby you have fractional ownership through that. So instead of having a lot of shareholders having majority shareholding in a certain units, you actually have fractional ownership. One can invest, say, 200 to 300 rands. But as I said, with the Easy Property, I don't really have the actual details on that. But yeah, any more questions or comments?
There are a few comments. From Katlego, she said, "You're a great presenter." From Shluvi, she also said, "Nice one, Tabang."
Thank you.
There's Greta who says, "We are spoiled." Remorse Kolong. Yeah. And a few people asking if it is recorded. I should have actually stated this in the beginning, but I do want to throw you off, Tabang. We are actually streaming on YouTube, so it should be automatically recorded. I will send the link out.
Yeah, it is. But it's also recording on my side. I put on auto record.
Okay, awesome.
All right. As any comments, questions?
Hi guys. I think Tabang has covered everything. I don't know if you want me to sort of go into how I structured my portfolio or portfolio structuring, or Tabang, are you done from your side, or you first want to take questions?
No, I think I'm done from my side. You're welcome to go ahead. If there are any questions, we can always go back to them.
Okay. So just I think Tabang has covered everything succinctly in terms of, choosing a broker, how to go about it, what you need to look for, and, the risk reward and everything like that. I think I just wanted to bring in an element of how I went about structuring my portfolio. So as I've previously shared, I think on Twitter, I've structured my portfolios in such a way that my tax-free investment has the exchange traded funds. And in those exchange traded funds in my tax-free, I've made sure that I pick exchange traded funds like property, prefs, purely to get the dividend aspect, because as you know, your tax-free grows with dividends. So I've sort of tended to go for your more SA kind of exchange traded funds that give you your dividends. So I've gone for REITs, property sort of ETFs, your prefs, which is your core share pref tracks, which has a whole lot of preference share in there, and they pay a bit better dividends. I've gone for your Resi 10, which has the resources in there. And right now, because we're sort of in a commodity boom, your mines, some of the mines are, printing cash. So that's also a good source of dividend income. And then in that account, I've also added a global perspective. So I have your NASDAQ, which is very tech heavy. It's a total return ETF, meaning it doesn't pay out dividends, but it does reinvest the dividends on as they come. So I don't see the dividend physically in my account. It reinvests on my behalf. And I also have the Signia 4IR. I know the NASDAQ 100 and Signia 4IR sort of is similar in terms of the tech focus, but I like what Signia had, hence I also added it there. In terms of structuring my, my SA portfolio, as I call it, I've sort of gone for some of your resources. I know resources and I've tended to go for high dividends there as well. So your resources like Kumba, even though Kumba is an iron ore producer and it's a single mine, I try to go for diversified miners. in that portfolio. So diversified miners, if one commodity is doing well, the mine is still able to produce and pay out dividends. Whereas a single miner like Kumba, it pays great dividends. You should check out their dividend policy. I love them. They pay a huge dividend to their shareholders. When iron ore is not doing well, then it's a problem. Whereas diversified miners like your BHP, they're a diversified miner, which means they mine different commodities. So if at least one is not doing well, they've got other commodities to cover them. So I tend to go for your diversified miners like BHP. I do have Kumba and Exxaro purely for the dividends because their dividend policy is great. They pay quite a nice dividend. So that's the miners. I've included a little bit of the telecom. I like MTN. I like MTN's story and what they're trying to do in the tech space. I mean, if you look at, they used to have Jumia, which is now listed now, and I think on the New York Stock Exchange. Can't remember if it's on the New York Stock Exchange, but it has separately listed, and they sold their entity in that company. So they're very focused on tech, and I think they're undervalued at the moment. I think below 100 Rand per share for me was great value. So it's at a discount, given what they're trying to do and the tech-heavy space that they've taken, and just some of the things that they're doing. So I love MTN as an example, and then everyone loves Purple. Everyone goes on about Purple and what they're trying to do. I think they will get there. So that's a punt for me. And I'm a bit speculative. So I've gone the EC10 route, crypto. I've added that to my portfolio. I also have a few speculative sort of companies in that portfolio as well. So I know myself, I'm probably a moderate to aggressive type of investor. And then my US portfolio is purely, it's got dividends. I like the dividend, sort of your ETFs, but I've gone all growth in there. The US and tech right now is pumping, and I want to capture some of that growth aspect. So my US portfolio is very much the likes of NVIDIA, the likes of Shopify, the likes of C, very high growth companies essentially, which are growing, so they don't pay dividends. But I know the share price over time should appreciate over time. So I think I just wanted to highlight that in terms of how I've gone structuring my own portfolio when I look at things.
All right, thank you, yes. There are a couple of questions in the chat box. The difference similarity between rates, I think that was covered. Is this all classified from Chimbuzi? Is this all classified as passive investing? Is this the best way to invest? And lastly, what's your view on active investment, like being in business? Okay, so with passive investing, I think you go in the route of ETFs. So you buy and hold for the long term. Whereas with active, I think it's more short term to medium term, and then you basically change your strategy depending on the market movements. All right. I think for beginners, I would prefer the passive sort of investing. Even picking individual stock, will that potentially offer the highest return? Look, stock picking, it's not as easy as people seem like. There are a lot of people who started investing, say last year March, I think after the coronavirus thing. So since then we've seen a market recovery. A lot of people bought a lot of companies at their lows. For instance, Sasol was then trading at around 28, 30 rands, and now it's like 250, 260. whether it's pure luck or was it based on proper analysis, I don't know. But you need, as I mentioned, you need to be able to do your research before you pick the individual stocks. It's actually tricky picking individual stocks than going to the route of be it ETFs. For beginners, it's quite tricky. I hope that answers your question. The next one, what is the best strategy to apply stop losses for long-term investing if your stock is performing badly? Okay, so if you believe in a stock and you believe that it will recover from their lows, there is a method that we call rand cost averaging, or we often say buying the dip. The dip meaning the price went down probably below your average cost. So if I buy a share, and I'll use 10 rand for simplicity. If I buy a share at 10 rand and it goes down to say 8 rands, that's 20% down. So if I buy another one, my now unit cost will be on that particular share will be 8 rands. But now I have two shares, one bought at 10 rand and the other at 2 rands. So now I have two shares. So my average unit cost will be down to say 9 rands. So basically 18 divided by 2, which is 9 rands. Hence we call it rand cost averaging. I think that can be applied to when stocks are down, but obviously that will depend on your strategy. All right. What are tax implications, capital gain tax on these dividends or even selling? Tez, do you want to assist with that?
Sorry, what's the question?
They say, what are the implications of CGT? There is capital gains tax, dividends, or even selling. I'm not sure I can understand.
So what is the tax implications if you sell in terms of CGT or dividends?
Yeah, or dividends, yes.
Okay, so for dividends, you will always pay 20%. So the dividend you received is already net of the tax. The company or your broker will withhold that tax on your behalf. So the dividends you receive won't be taxed any further. But obviously, that would also depend on where you're receiving the dividends from. If it's local, it's 20%. If it's some countries like the US, it's 35%, but there is an exception to that rule where you will get some of your dividends back. In terms of CGT, it depends if you're a trader or a long-term investor. If you are an investor, you are likely to pay CGT once you actually realize those profits. And by what I mean by that is once you actually sell and close that trade or that investment. If it's a loss or a profit, that will count towards your capital gains calculation. If you're a trader and you close and open positions regularly, that will go into your income tax and not CGT, and it will be seen as your regular income, and it's going to be taxed at your variable tax rate for that particular year. Yeah, I hope that gives some clarity.
All right, thanks. And we have another question from Leborang. What price will I sell my shares for? Say I sell my shares over the weekend and the share price is 1 rand and it says it will sell when the market opens on Monday, and now when the market opens on Monday, the share price is 80 cents. What price will I get the share for? So yeah, as I mentioned, the trading hours are from Monday to Friday. So if you put in a trade over the weekend, it won't go through. It'll show as pending until Monday, and it will execute, as I said, I think there was a slide on that, at the current market price. So if it's 80 cents, yes, it will be that 80 cents.
Just to add on that, a trick that I learned is that
Yeah.
never buy before, I think it was 11, because all the excited people have placed their trades that everyone is going through. Rather wait after 11 and never try and is it buy or sell after 4:30. Was it 4? I can't remember, but yeah, that's the trick of the trade I've learned. Purely because early morning, everyone has sort of put some of their things through, and everyone is sort of excited by opening of the markets. And usually mid-morning, it's stabilized. That's something someone told me a long time ago, and I've stuck to that. I don't know
Yeah,
if the others can add.
Yeah, so that's correct.
true.
So for investors, they would want to wait for midday, once the stocks have stabilized, to then make a decision whether they're buying or selling. For traders, though, it's either the morning or the end. It's very rare to find traders active in the middle of the day. So yes, that is correct. So if you are a trader, I do remember when I was trading crude oil, I used to sleep at like 11, because that's when crude oil markets would close, and they would open 2 hours later. So they would open at 1, and that's when the excitement is. And then once you make your profit or loss, you then go to sleep and wait for the next close and open. So yes, it's true what S is saying.
All right, thanks, guys. The next question, is it possible for you guys to create a session where one can learn how to do basic fundamental analysis, how to know if a P ratio of a company is high or not, etc.? This may be a big scope, but even a link or video where I can watch or read how this is done in simple terms. Yes, we can do that. Tez?
I promised I promised people fundamental analysis tutorials some time ago, but
Is
I've
it?
had a lot of work that has distracted me. I have all the notes and everything. I just have to whip it up into a presentation. But if there is someone who can do it before me, then that would be most welcome as well.
All right. I see Neo it's unmuted. Neo, are you coming all right, bro? Neo. Okay. Next question. I wanted to ask on tax implication when trading through easy equities. I think you touched on that, Tez.
Sorry. So what's
I
the
think there's another question about, I wanted to ask on the tax implication when trading through easy equities. I think you touched on that, didn't you?
Yeah, so it's the same. Like
Same.
I said before, if you are investing, um, you'll pay capital gains tax, and if you're trading, you'll pay your normal income tax. Easy Equities should give you a tax certificate at the end of the tax period, which will assist users to do their tax calculations.
All right, thanks. Can you go to the slide with the RMH shares? Please explain what happened when a company offers a dividends. What happens to the share price? Okay. So dividends. Yes, no, finally, dude.
Oh,
What happened? Are you okay now?
I don't know what happened, but I just don't know, but here I am.
Yeah,
No,
no,
I've
welcome.
been
Welcome, bro.
listening. I've been listening. I just want to add on what S had said about buying on the 11th,
Yeah.
and yeah, I've also learned that on Friday it's not the best time to buy because
Yeah.
usually on a Monday markets does the correction. So you might be
Mm.
thinking you bought on a Friday and everything is nice, and on Monday market does the correction and you might be in a dip. So I've actually got this from Karen Richards. She's on Twitter. She said we must always buy on a Monday, just after when the market has corrected. So surely there will be some dips. Then you go in on a Monday, not on a Friday. That's what I've learned. That's just what I want to add.
All right. Yeah, while you're on it, Moran, here's a question. What
Correct.
happens to a company when it offers dividends? What happens to the share price? And in this case, they're talking the RMH shares.
Okay, basically what happens when a company when when a company offers shares, right? They're taking out money from their own balance sheet. So after just declaring the shares, if that company is actually not strong, book in pocket wise, the share will tank. That's just how I understand it. So
But
when
why does it tank?
it
Can
tanks
I
because now money goes out of their pockets. That's the simplest thing.
can I explain
Simplest
that?
answer that I can think of.
So
All right, I think Tez has something to add. Yes.
so let me explain it like this, right? So let's say a share is worth 1 rand, right? And
Yeah.
that's the share price. That's basically the value of the company. Fundamentally, you're considering all the assets of that particular company, right? So let's say for the year, the company has 100,000 rand cash or 100,000 rand worth of assets, which basically values the company to cost 1 rand a share. Out of that 100,000 valuation, 40,000 is cash, all right? And then the company says from that 40,000, we will give 20,000 as dividends, meaning money is going to leave the company, right? If money leaves the company, it means the value of the company drops. If the value of the company drops, that's what happens to the share price as well. So usually when there's a dividend given out, the share price will drop by the amount of dividends you receive or that is sent out. So it's directly proportional to what's paid out. So that's what actually happens. So it's not that the company is doing bad or it's a trick to, to keep you in. Just fundamentally, that's how it works on principle.
All right. Thanks, Tez. And I think if you look at RMH in this case, I think that time it was trading around 195 to 2 rands, and then they issued a big dividends of around, or pre-tax of 80 cents. And I think it dropped around 45%, then it was around 120, 125. So yeah, it does make sense. Okay. Okay. Tess, this one is for you. I'm sorry, don't feel I'm picking up on you, but this one I feel actually is to you and Jose. This is what we were discussing yesterday. Is it sensible to include or consider crypto as an asset class? This
I thought
from
we
Lerato Mashilwan.
The answer is
crypto
yes.
in terms of what it is, yeah. I mean, you're
Yes.
just gonna get a return. I agree. When something is regarded as an asset, is that you must get a return. I agree. So if you're gonna get a return, then it is an asset. Tez, were you gonna add? But Tez already agreed.
No,
So
but there's nothing
yes,
to add. The answer is
Erato,
yes.
yes, yes.
The answer is yes.
Nothing to add, nothing to subtract.
Yeah.
Yes.
All right. So yeah.
So I'd like to maybe add,
Yeah.
one thing I always encourage people to do when they're considering starting a portfolio is to say what role will a specific stock or asset class add to my portfolio growth or trajectory. So I always think it's never in isolation. If you're gonna think of crypto, it is what role will crypto add to your portfolio? So for me, that's the question I asked myself, and then I added 5% of my SA portfolio has crypto in it. So for me, it's always ideal when you're thinking of adding a specific asset class, you need to ask yourself what role will it play in my portfolio? And like you've said, what returns will I get from this asset class? But one thing we must always bear in mind is the volatility of crypto. What is your risk profile? Always when constructing your portfolio as well. What is your risk profile? Are you medium, low, high? Where do you fit in? And what is your time frame as well?
All right. Thanks, S. Look, as I mentioned yesterday, I'm not saying I'm against crypto, but personally, from my point of view at this moment, it's not my core. What can I say? Core asset. I think it's overall. I think it's less than probably 2 to 3%. So for beginners, I wouldn't really encourage them to go into it unless they really have money to lose. So rather start with the tried and tested, then you can allocate some to crypto. But to answer the question, yes, it is an asset. Next question: what's your take on penny stocks? Neil?
Oh, they've got a potential to be triple or gazillion Vegas. But now they're so volatile, they're like your crypto. Because wait, what did I just say? Yes, they are very volatile. So when you go in knowing very well you trust or you believe in that company, the financials of the company are doing okay, then you can go in, but just be careful. So yeah, penny stocks. I mean, most of the companies they started as your penny stock. Check Capitec now. Didn't Capitec started as like a R7 or something like that? Now it's worth 1.4. Imagine if you went in while it was your R7 back in the day, how much would you have by today? So be on the lookout for them, but just have a lever so that when it tanks, example, I will mention Orion. I was sitting at 200% gains this year, but now I'm sitting on a 10%. So it's something that you should consider. So yes, go for them. They might be. Oh yeah, wait, guys, thank you. Oh yes.
All right, thanks. Just my view on penny stocks. Like as you said, they do have potential to grow, but it's mainly small, as I say, small cap companies that are still trying to grow. And as Nell said, they are very volatile, and just exercise caution. That's all. All right. Next comment. Please, can you drop YouTube link of this webinar when done, or some webinar? Who's the lady I'm picking a portfolio? Can she drop a handle to follow? Okay. The link will be shared. Tez will drop the YouTube link, and the lady is S. You can search on Twitter S Mukombo, and can she drop her handle to follow? Yeah, just search on Twitter. Enjoyed her portfolio and her reasoning behind her why. Thank you. All right. Thanks, Deborah. When researching, what exactly are you looking for that can give an indication that a business is worth investing in? I think that was answered.
But you need to go into detail, like what to
Okay.
check for.
All right. Okay. Maybe
But then
you
you
can
said
take
it's
it
gonna be
now.
on our next. No, I'm not gonna. But
Oh,
I agree. You said the next what's this? The next the webinar, this thing. We're gonna go into details, or what is it that we actually look at to check if maybe the company share is trading at a premium, at a discount,
Yeah.
stuff like that. But not today, because not today. But but I did mention this to you, right? But you said not
Yeah.
today.
No.
But we will host it specifically on how to analyze company financials. Didn't Ted said also he's gonna drop something like that? He's got notes.
Yeah. Yeah. That's. I think it's based on fundamentals. That I think we'll cover it in the next webinar. Salome and Refilo. Yeah. I think that their questions are similar. Hi, I'm a beginner and a low-risk investor for now. When would you know to sell and rebuy? Yeah, I think that will cover in the next session. Any tips on the most tax-efficient way to invest besides TFSA, Chimbuzi? I think
Go
another
for crypto
way.
before they takes it.
I will not.
They have SARS hasn't come up with methods or whatever on how they're going to recover tax on Bitcoin.
Yeah,
So
but
go
no,
for crypto. No,
we're talking
I'm
beginners
trolling,
here.
guys. Sorry.
Just
Sorry.
now you.
Sorry, guys. Sorry. I'm joking.
They must buy crypto. Ne? What's that coin of yours? Is it Shibu?
Dogecoin, Shiba Inu.
Shiba.
Yeah.
Okay.
Just on the
No,
tax
But
purposes,
on a serious note, okay, as
tax
you can go ahead.
account.
I think there is
okay, so just high level. I'm not a tax expert, by the way. So I just wanted to add something in terms of the tax. There's sort of three brackets that I like to think of in terms of tax. There's the tax now, which has your unit trust, your shares, your endowment, interest-bearing investments, and stuff like that. So as if you're in a savings account, you get that I think it was 23,000 per year that you get from SARS. If you've earned interest, that's the max you get. And then there's a tax later sort of bracket, which includes your pension fund, your provident fund, your retirement annuity. So you pay that tax later. And then there's the tax never, which is where tax-free investments fall in. The money you put in there is after tax. Any growth is never taxed. Whereas the tax later, which is your pension fund, the money you've put there is taxed before tax. The money you put here is before tax. Any growth is taxed, or any withdrawal is taxed. So if you move employees, for example, and you take some of the funds, I know I can't remember the exact amount, but the first withdrawal, I know it's a sliding scale based on your income tax. There's a tax advantage that you get, and anything above that you're taxed. So just to be cognizant of that. And then the tax now, any money you put in this bucket is taxed. So like the what I've mentioned, a savings account where your limit of 23,000, you have a limit. SARS gives you a limit of 23,000 per annum of interest before it's taxed. Those are the things I think for me in a high level. I just thought I'd drop that in, that tax question. So when you're thinking of investing, you need to ask yourself, where does this fall in and how can I maximize it? And, I'm all for free advice and everything, but when it comes to tax and owing SARS, I don't play with that. If you need to consult with a tax specialist, it's a service for me personally. If I'm, I'm building my portfolio, it's something I would want to do. Or it's a service I definitely want to pay for, just to ensure that you structure your stuff in a tax efficient way.
All right. Chimbos, one of the ways that you can, in a way, get most out of your tax, I think, is through arrays. So with retirement annuity, anything you contribute towards that is tax deductible. So you can actually get your money back through that. But just note, with an array, you only access the money once you go on retirement. So you cannot withdraw it until then. But for now, I think the tax-free or savings, which I think there are more tax-free investments account, it's one of the efficient ways. All right.
Just to
next question.
Sorry, just to clarify.
Yes, Ted?
So yeah, like you and S alluded to, besides the tax-free investment, it's actually your retirement investments, which is deductible. But there mustn't be a misunderstanding that if you put in 500 Rand a month, you're gonna get 6,000 Rand from SARS at the end of the year. What actually happens is they just remove what you've paid into your retirement funds from your tax calculation, and then you just pay less tax. So it's not to say that if you contribute a certain amount, that's the amount SARS is going to give you back. What it actually means is it's going to be removed from your tax calculation, which should or would reduce your tax payable for that year.
All right. Thanks, Tess. Quick one. What's the most cost-effective way to fund the USD account? I believe
At the moment, no.
That's from Mamo.
Both
I believe she's referring to the easy equities one. So from what I
Yes.
know, they none. So you actually need to fund your ZAR, and then from your ZAR, then do a transfer to your USD, which costs you like, is it $4.6? I think Tez was talking about it. So if you look at it, it's quite a lot of money. So you look at what 60, 70 rands at the current exchange rate.
$4.6.
Yeah, $4.6. Yeah, so it's quite a lot of money. So what I can advise is to try and accumulate enough capital as possible, then limit the number of transactions basically. Because if you're going to transfer, say $100 every month, then that's a lot of money lost to fees.
I have a question, Thabang.
Yes, no.
I have a question. So now tell me, if I have a global account, right, and I put what's this dollars in it, don't you think if I transfer from a global account that's already in dollars and I transfer it to a Citibank account, the Easy Equity account, wouldn't it be tax or not tax, man? What's this? Wouldn't the fees be lesser? Don't you think that? Let's say I have an offshore.
But does Easy Equities allow that? Because I remember
but I want. Okay, go ahead. I said I once deposited from FNB. It was in December, your bonus, and I had a dark Christmas because the fees that they charged me, it was a lot. But I'm thinking if you have,
was it from an
USD
to an USD?
No,
Is it?
It was from rands coming from FNB and going to a Citibank.
No, with Citibank, they actually bounce, because I remember my first transaction, it bounced back and then they returned it, and then I had to. Is it? Okay, maybe they worked different.
Yeah, it went through. It's just that Easy Equity charged me like $60, and they said it was processing what fees. $60.
You have money, eh? Okay.
Yeah.
Next question.
No.
Guys,
before
It's
you go
9.
to the next question, let me just
Yes, Tez.
answer that question. There's two transaction types when you are transferring funds. You can either do it through your normal EFT or SWIFT transaction, which usually is what costs the most. And then your other option would be through a bank card purchase, which usually costs less. So if you are transferring to Easy Equities, unfortunately, the $4.6 in most cases would be the most affordable way for someone here to transfer to their account. Yeah.
Yeah. All right. Yeah, guys, it's 9 o'clock. I've scheduled until 9, but I think we can go for another 15, 20 minutes and then we can wrap up. How does announcement of company earnings affect share prices? Please explain what earnings refer to and how it affects an entity's share price. Okay, that's the one part. Also, does an increase or decrease in interest rates also affect company share prices or just the value of government bonds? That's from Debo Sekamel. Who wants to take this one? Neo, Tez, S.
Okay. Wait. Does she know Pretty Siakamel? Is she like that Siakamel? Do they know Pretty Siakamel?
I don't know. Let me ask. I'll ask her in the comment section.
All right. No, I was just asking if she knows Pretty Siakamel. Pretty Siakamel is Wako Skim Sam.
He probably does. Please answer the question.
No, let's give it to Tez.
Can you please repeat the question?
Tez,
Okay, the question goes, okay, it's actually a long question, but I'll try. Let me break it down. One, how does the announcement of company earnings, companies issue those trading updates, earnings per share, blah, blah, blah.
sense.
How does that sense, correct? Yeah. How does that affect share prices? And explain what earnings refer to and how they affect an entity's share price.
Okay, let me answer the first part and then you'll have to repeat the second part for me. So basically the first part is
Right.
how does the sense affect company share price? Right?
Yeah, but in particular to earnings.
In particular to earnings.
Yes.
So you can't really just isolate it to earnings because there can be a broader info behind that. So the stocks move according to market sentiment, how the general market perceives certain information received, and earnings is just one of the many factors that can affect a share price. And then you also have your fundamentals in terms of those earnings. Earnings according to liabilities, earning according to owner's equity. So you can't just scrutinize it to earnings. It's too broad. But it all has to do with market sentiments for that particular stock. What the general or what the majority of the investors in that particular company feel about that. If earnings are good, then most likely the share price will go up. If they're bad, most likely they will go down. But there are rare instances where the opposite actually happens. Why? Because there's different factors to also consider. Can you repeat the second part of that question?
Okay. The second part goes, does an increase or decrease, that is changes in interest rates, also affect company share prices or just the government bonds?
Increase and decrease in interest rates, as in the repo rate.
I would assume so, yeah. Just basically fluctuations. Say the Reserve Bank, they're gonna
Not that
change.
Yeah, not that I particularly know of. It would affect you if you are invested in a traditional investment or unit trust. Their earnings are usually linked towards inflation or interest rates. It's actually inflation. But for a general company, if you're buying a stock, most likely not. Maybe there's a different view from the other speakers who can educate us all. But from as far as I know, it won't really affect it.
I think it does to an extent. I think actually the financial sector, your banks. Yes, would you like to
Yeah,
take that?
so
Yes.
this is a beginner session, so I wouldn't want to be complex.
Yeah, just keep
But
it simple.
yeah, so a company's future value, or what is attributable to shareholders, is based on a company's future cash flow and sort of earnings and things like that. So it impacts valuation because you're talking about a company's future cash flows. So just high level, the current issue with the US growth stocks at the moment and the tech stocks is that some of these valuations are very high purely because the market has placed value on the future earning potential of these companies, these new tech stocks. And as a result, their valuations or price to earnings ratios are very high. And the sentiment is that, should, people flock to equities when interest rate is low. And the environment in the US right now, interest rates are very low. So people are always trying to find value and trying to find a home for their capital where it makes the most return. And where is that return? Which asset class is giving them returns at the moment? It's shares, equity. So they run to that asset class. When the interests rise, they can get value from, your savings a little bit. So they sort of tend to run not away completely, but shift some of their cash to other asset classes. I've tried to be simple as I can be. So just be aware that a company's value is based on the future cash flows, its earning potential, future cash flows, free cash flows, so to speak, which impacts a company's valuation, price to earnings ratio. So you want to make sure that, you just keep the macroeconomic factors in your valuation when looking at a company. I've tried to be as simple as I can be. Hope that helps.
I think it does. Thank you. And as one was asking about the app you're using to track your investments, I think you shared your portfolio. I think it's 22/7, correct?
Yeah, correct. 22/7.
Yeah. All right. Another question from S. Chimbuzi. What is the ideal time frame for long-term investing? Is it when I'm 65, too old to spend my money? Okay, so let's look at it this way. Remember the risk reward chart I shared. So when you're young, say you're in your 20s, you still have more time to invest your funds. Say you started working at around 20. The retirement age is around 60. So that gives you 40 odd years to actually work and invest your money. So you actually have more time to allow your money to compound, right? And I think you can take higher risk asset classes, your equities and stuff. You can do away with not putting a lot of your money in cash or bonds, So, but as you grow older, I think your portfolio allocation should also match with your age as you go. Because I mean, if you are 50 towards your 55s, that's when you should be moving your money towards more low risk asset classes, because you don't want to risk your money at that kind of age, because you have less time towards your retirement. So am I too old to spend my money? I wouldn't say you are, but try and maximize as young as you are, and then as you grow older, put it toward more lower, safer asset classes. I hope that answers your question. What's that? I think the others are just comments. This is very insightful. Can't wait for the next session. Thank you, Refilwe. Another question from Salome. Is it advisable to buy SA shares instead of saving the money with a bank in an effort to accumulate enough to buy US shares? Neo or Tess?
Repeat the question. What was
Is
the
it
question?
advisable? Remember, we mentioned the issue of transferring to USD being cost
Oh yes, it's very
not cost
costly.
friendly. So now, how does one build up enough capital? Is it advisable to buy, say, shares instead of saving that money to try and accumulate it?
I guess, okay, now you can either save it or, but I don't advise buying shares then selling them, because what if now you wanna move those funds to the New York Stock Exchange, and now the shares that you bought now are tanking? Are you gonna sell them at a loss or what? But I just think you must just save that money. Then when you are ready, deposit it into your EE account and transfer it to the USD. I think it's best that way.
If someone really wants exposure to the US markets and they're afraid of the costs of transferring, I think the best option would be to buy an ETF. You get the same exposure at a lower cost.
All
100%.
right. All right. Yeah, I think we have covered most of the questions. These were very insightful. Okay, we covered that.
I just had another comment from Keletso. She said this was a very, very insightful session. She can't wait to join the speakers on the next panel.
Keletso, Miss Island.
Keletso, we can't wait. We can't wait, Keletso.
All right.
What you laughing at?
All right. As we close, okay, this is more of a comment from Lerato. I'd like to thank everyone in the FinTwitter community who dedicates their free time just to educate us, more through spaces, testimonies, and general contact on your timeline. Also, thanks AfroTez for the recordings. They always come in handy when I miss the session and can always go back and make notes. May God bless you and increase your wealth. Okay. Thank you. Thank you, Lerato.
Username Rato.
Huh?
Go tweet. Username Rato.
I don't know. I only have formal names here. Do you want to follow her?
Oh no, I was just asking because I never came across Rato.
Okay.
It's just a question.
Okay, host. All right, guys. I think we went 16 minutes over what we had planned for, but I think so thanks everyone, guys, for joining in. Thanks for your time. Thanks to all the speakers as Neo and AfroTez, and thanks the audience for your questions. And
Oh wait, you haven't thanked S yet.
I haven't.
You did not. You did not say thank you to S. No, you haven't. You said me and AfroTez.
He did.
I did.
He
This
did.
guy. Okay, now final remarks. It's late, Maren.
No remarks.
Okay.
No remarks. Nothing. But it
Tez,
ended so quick. Wasn't it
how?
so quick? Ay, man.
Do you still want to go on? This is not a space session.
My final remarks. I
We,
just
we can
hope.
have an after party. Go Twitter. It's fine. Tez,
Yeah.
I just hope some people got a lot from this. And yeah, if you're still unsure of some few topics or aspects, I do advise that you just do some research, ask around. You can follow any of the speakers, and I'm sure they will be able to assist you. But yeah, I really do hope that you guys do actually benefit from this session.
Oh, wait, actually want to add something. The issue of research, guys. What is it that you research? Because I might be sitting there and I'm listening and they say I must research. What am I researching? Don't you think, Tawang, on the next thing that you're gonna host, you're actually going to unpack what is a research? What am I researching? What am I looking out for? Because sometimes it doesn't help to tell someone to research, but they don't know what to research.
have you heard of Google?
Yes, there is a
I'm kidding.
Google, but the
I'm kidding.
indicator, man. What do
Remember,
I look out for when I do this
We did-
research?
We
Neo,
did get some questions on that.
so remember when you're researching, right? You cannot bottle it into what you should specifically research. There's so much information out there, and putting borders around it is actually going to be harmful more than helpful. And that's why I always use the broader term of research. Research terms, research terminologies, research information, research stocks. Try your best not to bottle it and put someone in a cap, because people are different and they have different goals. So if I tell them what I research, I'm giving them my investment strategy. Whereas if you tell a person to just do the research into what they're interested in, you're not putting a cap on that person and they can find their own way. And remember, once you start researching, you go down that rabbit hole and you start learning more and more, more especially things that even we don't know. So be very sensitive when you're telling someone what to research, because you're actually putting gates around them as to what might be taboo and all that. Yeah, that's just my take.
100%.
All right. Thank you, Tez. But yeah, look, now we'll touch that I think on the next session, because I mean research is broad.
And research on
and there's
Shiba Inu.
fundamental and technicals. Yeah, we'll get into that. As in closing,
I think for me, the road to investing is, it's a long race. It's not a sprint. It's a long journey. Take your time, understand it. But one thing I can say without a shadow of doubt is investing, is that one thing that really allows you to grow your money. I think it's been proven even on your, risk reward graph that you've got at. Cash sitting in savings is low risk, but it has low returns. You want to at least give your money a chance to grow. So look at other asset classes. I think we know a lot of us have known savings, which doesn't give much, but look at other ways. If you don't know how to, if you're not yet comfortable picking individual stocks, it's okay. You can do exchange traded funds. And I think, there's a book, A Path to Wealth. I can't remember the name, but it's A Path to Wealth. It's basically people that have managed to grow their portfolios by just investing in one exchange traded fund. I know in the US, there's the Vanguard Total World Stock, which most of them they buy, and they only buy that exchange traded fund. And, they've managed to grow a lot over time, even the S&P 500. even I'm not so sure about Satrix Top 40. I have to be careful because the JSE Top 40 has been up and down. But there are other exchange traded funds. One or two is fine. You don't have to be fancy. As long as you start and grow with time, you can actually get good growth from there as well. You don't have to do the fancy stuff. And when you're comfortable, then you can start stock investing, individual stock investing. But the biggest thing is just start. Having your money in cash is not the best way to grow your money. It is one of the ways, but consider having other asset classes as investment vehicles.
All right. Thank you. Yes. Again, thanks everyone for joining us.
Oh yeah, I
It
want
was
to
a
add
pleasure.
something.
Yes.
It's
Yes.
about-
No. Yes.
Avoid Twitter hype. Don't see as posting stocks there and you go buy. You don't know what S is planning in the long run. You might buy the same
FOMO.
stock and you see flames. FOMO.
FOMO. Yeah.
Avoid
I mean,
FOMO.
Labat,
Yes.
that cannabis company, it was trading at what, 80 cents last week? I think it
Now it's
jumped between Friday and Monday, jumped to what, 65, 70? That's like almost 200%. And now it's back
Mhm.
at 40 odd, So imagine someone who
When you
bought it
left
at
this list,
65.
right?
Yeah, so it's one of
Yeah,
those.
we must always avoid FOMO. When you want to go
Yeah.
into a stock, just know, all right, you are in it for tears and all.
All right, guys. Yeah, thanks everyone for joining. Bye. You have a good night.
Sharp.
Thanks. Bye.
Why can I not close here?